A lot of people are searching for profitable industries to invest in. Joining us this morning with more on hot investment trends is Brent Wilsey, president of Wilsey Asset Management. Brent, great to see you.
Good to be here.
It's literally hot trends in investing. You're sitting here talking, I haven't even heard of a lot of these, but within the investment world, there's really a buzz.
It's really a buzz, and a lot of people have not heard of them yet, and that's why I want to kind of talk about them today so they know what they are. They are good for maybe some younger investors who it's very hot with them because it's exciting, it's new, and so forth. And then I'm talking about things called Acorns and Robinhood and Square, which you're probably saying, what is that, a character or something, you know?
Yeah, right.
And these are companies that have come out that they will help small investors do what we call spare change investing. So if you charge them at the store for $12.10, the extra 90 cents will round up to 30 cents, and actually 90 cents will go into the investment of Acorn or Robinhood.
Okay. What's Robinhood?
Well, Robinhood is another company that's doing this for you. So they're trying to be fancy on how to get this money in. And they don't have a lot of money yet. I mean, like Acorns, they have 187 million accounts that is worth about 800 million. Now compare that to Charles Schwab, that has, and we're kind of jumping ahead here about robo investing, they've got about 33 billion with about 220,000 accounts. So Acorns, Robinhood, a lot of very small accounts. They're just trying to get what we call Henrys. And Henrys are high earners, not rich yet.
I see, they're trying to get rich.
Trying to get rich.
Okay, you say robo investing. Talk to us, explain exactly what robo investing is. Is it a good idea, bad idea?
Well, this is a new hot trend. Robo investing, like, oh, it's not done by human any longer. It's done by computer formulas or by mathematical formulas, logarithms and so forth. And what they try to do is they try to set up your account being diversified in stocks and bonds and real estate and all the commodities and all these different things and move when those mathematical formulas say to move. And I think the concept sounds pretty good, but I still believe that it's going to miss a long term. We've seen computers mess up even back in '87, how the market crashed because of computer systems. And they all use ETFs. And that's another big problem. ETFs are exchange traded funds. And the problem with these, and actually now, remember, you probably don't remember, I don't remember his name, but on the housing bust, a gentleman predicted that was going to happen. He was a well-known investor and so forth. He is now saying that this, with ETFs and index investing, is going to be the next big crash we're going to have.
Okay, is there any particular sector where robo investing might be a good idea?
Not really, because they're trying to do all the different sectors, and they're trying to say, okay, we're going to diversify the portfolio for you. And advisors used to do it. They'd have a balanced portfolio and use asset allocation. Well, now they're trying to do it by computer. And it sounds pretty good, but there's things the computer can't see or react quick enough. And what I worry about with that is that if they do have a big move, a lot of ETFs could be sold out or try to be sold out, and there's not a good secondary market for those. Like if you have an IBM in your portfolio, you can sell it. There's plenty of trading on that. But on ETFs, we've not really tested it yet to where you have a big selling in ETFs. There's no markets to come in and buy because there's no hedge funds buying them. There's no secondary market makers trying to make a market on them. So there's a problem with that, which we will see, and it's going to be very painful when it happens. Wow.
Okay, and you mentioned index investing. What exactly is index investing?
Index investing is where you invest in different indexes like the S&P 500, the NASDAQ. You're going to have indexes in, healthcare, all these different things you can actually do out of indexes. So people like those saying, oh, you can't beat the index. The time will come when people are surprised that, oh my gosh, the index is not doing as well because they're market cap weighted. And the problem with that is that you don't know until it happens. And this is why long-term investors never do well, because they're always looking for the easy way out.
Right.
And I'm sorry, there's not an easy way to invest. It's very complicated.
It's complicated, but you need to stay in it for the long term and not get emotionally involved. That's rule number one, isn't it?
That is rule number one, and we like individual equities. And again, we've had companies in our portfolio we've held 10, 12 years, insurance companies, banks, energy companies. They're up 300, 400, 500% over that time frame. But we've held them, we've got the dividends on them. You don't need to get fancy. You need to buy what we always say, small pieces of large companies. And all these hot trends, they might be good for a beginning investor, but once you start accumulating some wealth of maybe $5,000, $10,000, $15,000, you need to start looking at other things to invest in.
Okay, you got any seminars coming up?
Actually, we do have one this Thursday, the 26th, 6:30 in Scripps Ranch. Go to our website, smartinvesting2000.com. They can see it there and sign up there. We talk about all these different things to help people become better investors.
Oh, I've been, and I know exactly. Believe me, it's very informative. They learn an awful lot. All right, smartinvesting2000.com.
Yep.
All right, Brent Wilsey, always great to see you.
All right, thank you.